Hi fellow traders, I'm making this video to share my Euro USD analysis with you. So I'm going to include 3 days story to let you understand what all factors I have included to make my mind up. So let's go back to November 22. So we saw a downward move on November 22 in early US session after release of better than forecast unemployment claims and better than forecast revised consumer sentiment of UOM, that is University of Michigan. So this was the fall I'm talking about that took place on 22. And then what happened? Market almost recovered to the upside more than 61.8%. You can draw this Fibonacci tool and you can see that the upward movement is more than 61.8%. So let me make it clutter free just by deleting other levels. So yeah, this is just a measurement tool. I'm not going to rely on any specific level of Fibonacci, but yeah, we saw that the more than 60% was recovered. It means that the movement to the downside caused by those two data on November 22 couldn't cause enough bearish momentum for further downward fall, and this movement to the upside was natural correction and was not driven by any data. So market started moving to the upside on the very same day on November 22. So it recovered almost 61.8%, no, more than 61.8% in the late US session of November 22 and early Asian session of November 23. And market came something around here before the release of European PMIs yesterday. If you look at the PMIs released yesterday from Germany, France and overall European Union, overall data was slightly positive compared to the forecast. However, it didn't cause any movement to the upside. There was two candles to the upside. This was the one, then there was this second candle. So first two candle of European session yesterday were bullish, but then market started going down, and then you can see the kind of movement we have, which is some sort of consolidation, and there is no direction in the market, and we have a feeble upward movement now to the upside. So it looks like market has been waiting for today's manufacturing and services PMI from the US, which is gonna be released 1 hour from now. Right now it is 8:47 a.m. in the New York, and 9:45 is when the PMIs are coming from the US. And it looks like today's movement will be decided by the PMIs. So let's see what happens in the rest of the day, but we are going to make a decision based on what PMI numbers we will see after an hour. So now I'm going to look at the technical factors by which we will figure out where to enter and where to exit the position, and what other technical factors are there in favor of our bearish bias. Let's go to the 4-hour time frame and talk about these recent high formed by the market. So market made a higher high if we compare last two highs, and if we look at the oscillator, which is MACD here, market made a lower high. So this condition is called regular bearish divergence, which is supporting bearish ideology. Number two is market already accelerated above this channel drawn by these two blue lines. When market accelerates above already a rising channel, or accelerates below already a falling channel, then it actually comes back inside the channel, or at least it comes to the border of the channel. So there are high chances that the market may fall down at least to the upper line of the channel. So if we are going to take sell position after looking at the number from the US today, if those number will come at least equal to forecast or more than forecast, then we will take a sell position targeting this area. That will be our nearest target. Now let's talk about the situation when we will have to exit the position in case of loss. So if market starts going up to the upside, then we'll look for the 4-hour candle closing. If any 4-hour candle will close above this high, previous high, then we will take the loss and exit the position. So this is the plan. But if market goes to the upside in a feeble manner, just like this kind of movement, and it doesn't cross above this high, or even if it crosses above this high but 4-hour candle doesn't close above this high, and if market returns back making any other bearish pattern, maybe on 1 hour or 4 hour, we can take another sell position, and we can target upper border of the channel again in the both of positions. So this is the secondary plan. And what other thing may appear if market goes slightly to the upside and then starts returning, and this can happen if PMI numbers will not deviate much from the forecast. So we may have some sort of Gartley. So you can see this will be some sort of ABCD move with CD as feeble move compared to the AB, and if it goes slightly to the upside, maybe it will reach 78.6% retracement level of this move from here to here. So let's say this is the X, this is the A, this is the B, this is the C, and then it goes to the upside until 78.6%, then this will make a Gartley. And this can happen in case of equal to forecast PMI from the US or slightly weaker, maybe by just 0.1 or 0.2 it can happen, and still then market still can go to the downside from this level. So our if we see such kind of movement, if we do not get any significant deviation today in the PMI numbers, and if we see such kind of movement, then we'll have to totally depend on the technical factor. And technical fact, when I say technical factor here, I just mean price action. So we'll have to see the price action to the downside. If we see any candle pattern from here, better on 4 hour or 1 hour, and if we see that the price is moving to the downside with more speed than the previous fall. For example, this is the previous fall, right? And if we see speed to the downside faster than this, then we can enter the sell position and target this upper bar of the channel. So that's all. In short, we have a divergence, we have a probability of formation of this Gartley, we have PMIs, and we have seen in last 3 days that there were mixed data from US and Europe, which couldn't cause any big movement to either side. So market has been in indecision and has been trading inside this swing, which was caused on November 22. So today we are going to depend on the manufacturing PMI to figure out the movement for the rest of the day. That's all. Thank you for watching.